If I were you, I wouldn't leave this video for anything, because most people only realize too late that they made all the wrong moves with their money. When the next stock market crash hits, it won't send a warning. It'll just take. I'm Richard Blake, and I've seen firsthand how fear, panic, and poor decisions destroy years of hard work. The truth is, this coming economic downturn could either break you or become the best wealth-building opportunity of your life. But only if you know how to stop emotional investing from sabotaging your future. In the next few minutes, I'm going to show you exactly what to do, step by step, before it's too late. The moment the stock market crash hit, the entire financial world held its breath. People watched years of savings vanish in seconds, and the emotional wave that followed was stronger than the crash itself. When that happens, protecting your money isn't enough. You need to protect your mindset. Most investors don't just lose capital, they lose clarity. That's when panic sets in, and emotional investing takes control. But in these moments, the greatest power you have isn't in your portfolio, it's in your perspective. I dropped everything to speak directly to you, because what you do right now will shape your financial future. And the chaos you're seeing, it didn't just fall from the sky, there's a trigger behind it, and that's where we need to start. The recent economic downturn wasn't some random storm. It was set off by real economic decisions. Global tariffs, especially from the US, lit a match that no one was ready to handle. And when the US and China clash financially, the ripple hits everyone. It's like watching two titans push a boulder off a cliff, while the rest of us wait at the bottom. Tariffs make everything more expensive, profits shrink, and investors run scared. What starts as policy turns into panic in the markets. But this kind of instability isn't new. We've seen it before, and it always teaches the same lesson. The market reacts fast, but the real game is what comes after. Let me show you. Every generation has faced a major stock market crash and survived. From the panic of 1907 to the Great Depression, the dot-com bubble to 2008, the market always finds a way to rise again. And those who held on, they built wealth. I've studied each of those moments carefully, and there's a pattern. Crashes feel like the end, but they're often the beginning of massive opportunity. The recovery after each fall tells a story of patience, strategy, and long-term thinking. If you had invested during those dips, Amazon in 2001 or the S&P in 2009, you wouldn't just be stable today, you'd be wealthy. That's the power of perspective. And more recently, we had a front row seat to the fastest crash and rebound in history. March 2020 was unforgettable. One day, markets were fine. The next, they collapsed. But what followed? A historic rebound powered by the biggest wave of stimulus in modern financial history. With trillions pumped into the system, the market roared back. Those who panicked and sold missed it entirely. But those who trusted the process and understood investing during crisis saw explosive returns in months. This moment rewrote the rules for many. It reminded us that governments can, and often do, distort markets with massive spending. But that artificial boom paved the way for the market correction 2024 we're facing right now. Volatility isn't the exception, it's the rule. If you're investing for real growth, buckle up. Stock market volatility is the emotional tax we pay for long-term wealth. Think of it like riding a roller coaster. It jerks, it dives, but if you stay in, it always ends higher than where it started. That's the beauty of the buy and hold strategy. It's not about dodging every drop, it's about surviving the ride. I've stopped trying to predict the next move. Instead, I've built a system that thrives on chaos. Because once you accept volatility as normal, you stop fearing it. But fear still leads far too many people into the same destructive trap. Here's the truth. Emotional investing ruins more portfolios than bad stocks ever will. People sell when they're scared, then buy back when it's safe, missing the rebound every single time. I knew someone who sold everything during 2008. He never got back in. Meanwhile, the market doubled, then tripled. That one emotional decision, it cost him a decade of freedom. That's why trying to time the bottom is a fool's game. The rebound doesn't wait for your emotions to settle, and the only way to beat that pattern is to break free from it entirely. You want to win? You play the long game. Period. Dollar cost averaging into great assets over time will outperform 99% of strategies that chase trends. The data is crystal clear. Missing just the top 10 days in the market over 10 years can slash your returns in half. And guess when those top 10 days usually happen? Right after a crash. That's why I stay in, no matter what. This isn't about guessing. It's about knowing that over 20 or 30 years, history has always rewarded those who hold. And when you see a crash through that lens, something shifts. Let me ask you something. If your favorite phone or car dropped 30% in price, would you panic or buy? Yet when stocks drop, people run. That's backwards thinking. I treat every stock market correction 2024 like a Black Friday sale. I've picked up assets like VTI, AAPL, and MSFT during downturns, knowing I was buying them at a discount. Wealth is built during recessions, not after. But to act like that, you need a plan. A solid, grounded, personal plan that doesn't depend on headlines. So let's talk about how to prepare that foundation. The foundation of real wealth isn't exciting. It's discipline. Live below your means. Build a 3 to 6 month emergency fund. And keep investing, especially when prices are down. In recessions, the market hands you discounted assets. Don't ignore them. Instead of Netflix, look at your brokerage. Automate your investing into reliable ETFs or blue chip dividend stocks. Recession opportunity is real, but only for those who are ready. And if you want to truly be ready, you've got to listen to the people who've been through all of this before. Warren Buffett said it best: be fearful when others are greedy, and greedy when others are fearful. That's not just a clever quote, it's a life strategy. When the world panics, the market gives birth to opportunity. The smart investor doesn't chase headlines, they chase value. And when fear spikes, I lean in. That's when the magic happens. This isn't about gambling, it's about preparation. Because you don't need to see the future, you just need to be ready when it gets here. So now you know what you do during a crash says more about your future than anything you do in calm times. The question is, are you still waiting for someone to save you, or are you finally ready to take control? Because every stock market crash is a reset, and resets are where new fortunes are born. Ask yourself honestly, are you investing with a clear plan or just reacting? Are you letting emotional investing drain your decisions? This next economic downturn isn't coming. It's already here. The ones who act now will thrive. The ones who hesitate will watch from the sidelines. If this message opened your eyes, even just a little, then do yourself a favor. Subscribe to this channel, turn on the notifications, and stay with me. I'll walk you through every move you need to make, one step at a time. This isn't the end. It's your new beginning.